Today is Monday, July 9th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Alan, let's start by touching on the employment report from last Friday. The non-farm payrolls increased by 213,000 in June when economists had expected 195,000 new jobs. How does this affect Fed policy?
Well, it still appears that the Fed is on track to raise rates another time in September. In fact, we have the September 26th meeting, and there still is a question whether the Fed will raise another time after that. I'm still very much on board with one more rate increase in September, possibly another one. The consensus view, though, is for two more rate hikes from the Fed.
And on the U.S. dollar versus the euro, why has the U.S. dollar traded lower and the euro currency higher in the past 2 weeks, even though the Fed is on track to increase interest rates again this year?
Okay, well, the dollar is weaker again today, and the euro currency higher. And it is starting to look like interest rate differential expectations are turning a bit less favorable to the dollar index and a little bit more favorable and supportive to the euro currency. It appears that the ECB is backing away from their accommodative or easy credit policies. Also, we have the Bank of England now likely to raise interest rates in August, so that would also affect the euro currency positively. So it's a change in interest rate perceptions as far as changes there, and that is likely to continue to be supportive to the euro currency and a bit more negative to the dollar index.
The stock market. On Friday and today, stock index futures advanced even though the U.S.-China tariffs kicked in as the U.S. imposed levies on $34 billion of China's exports at midnight last Thursday. Why are stock index futures trading higher in the face of what appears to be worsening global trade situation?
So I believe that traders are looking beyond the trade situation. Of course, is very much with us, very much a negative. However, we do have earnings reports now coming up as of this Friday. The major banks will be reporting. Also, it does look like earnings will be up at least 20%, so that's a very good increase as far as the earnings outlook. So stock index futures appear to be looking at something more positive down the road. My guess is that earnings will be better than expected, and the global trade situation still a negative, but we have to really look at the way markets are responding to the news, and stock indices are putting in a very good performance with the kind of news that we have. That suggests higher prices are likely across the board for the stock index futures.
Let's look at the grain market. Steve, grain prices rallied last Friday. Could this be a bottom in prices for a while?
I don't think so. I think we've got to deal with three things that could be negative to prices. Short covering rally after the tariff things was somewhat expected as some of the shorts got out after the big drop in prices, but now we have to deal with this week a July 12th report that could show higher carryouts. We have to deal with weather that could be help grain production increase, and then down the road we may have to deal with farmers selling grain. Long term, we have to deal with the fact that U.S. might lose export share of beans to Brazil if the tariffs continue.
Yes, Steve, there was talk a couple of weeks ago that the U.S.-China trade war could send the grain prices much lower. Now we're in the throes of a trade war. Why do you think the prices are holding up?
Well, I think that probably the number one reason is that some people think we've factored all of the trade war of the $34 billion in prices. And so now you have to wait for the headlines to see, what happens now if there's additional tariffs, because the White House is talking about putting a tariff on the other $500 billion of goods come in from China. So I think we priced a lot of this in. Also, on Friday, there was a thought process that for the next 2 weeks, the U.S. Midwest could be warm and dry. I think that offered some support to the market. Today, we still see some net drying over the next 2 weeks, but temperatures could be cooler than what we thought on Friday.
USDA will issue a new U.S. World Supply and Demand report on Thursday, the 12th of July. What is the market looking for and what might be the reaction?
Usually the July report is a non-event, but this is going to be a very volatile event because the USDA World Outlook Board has said they're going to go in there and they're going to try to put some numbers together based on these tariffs. And so the average trade guess is suggesting that for 18 and 19, both soybean carryouts going up because exports are going down, and that because of the Mexican situation, we may use more sorghum for ethanol here in the United States, which means less for corn. And down the road, we could see a little bit less exports of corn. So the corn carryout could go up, and then the big spring wheat crop could add to the wheat carryout. So it could be a bearish report because of tariffs and because of the, to date, favorable growing conditions here in the United States.
You talked about weather a little bit, Steve. What's the latest on weather? I mean, is it hot and dry? Is there a relief out there for the Midwest, or are we in a perfect weather situation?
The 2-week forecast right now is wet and hot. So if you're a corn plant or a soybean plant, that's pretty good conditions. It may not be the best for human beings, but for the corn and soybean plants, you would think is pretty favorable. Now, last week's dryness, we could see crop ratings drop 1 or 2% tonight, but we're still looking at possibly above trend yields in both corn and beans. And with demand's going down, that means carryouts are going up, which means prices go down.
All right, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.